Hi guys, it's your guy here, the unknown trader, and again, just to clarify something, I chose this name for a reason. Okay, so I'm sorry. Most of the time, a couple of people have been asking me to reveal my name, but the objective of this channel is to stay anonymous. Okay, to stay anonymous and to help in secret. That's the objective of the channel. Hence, it's called what it's called. Okay, so anyway, that's enough. So guys, let's look at something very important, okay? Because I feel like I really need to clarify something. Okay, as you can see today we don't have major news, well, up until 2:30 South African time, okay, where we'll be having like a core PCE price index on USD, and we will have unemployment claims. So we are expecting the markets to trade normal from morning till 2. That's when they can manipulate the dollar. It's fine, we don't mind. Okay, so as we are expecting everything to go as normal, I want to clarify something. Okay, you see, yesterday they went up first session, they went up second session, and they went up third session, and they did not correct. And in most of our videos, what we talk about is if they will usually go up first session, which we can consider the first push, second session, which we can consider it the second push, and the third session, which we can consider it the third push. Okay, and we did say everything is in threes, which is true. However, I repeat, however, there is a variation, because remember, the objective of the market is to take capital from many and give it to few. And if they keep everything constant, if everything remains the same, then everybody is gonna know. And when everybody knows, that defies the main goal of the markets. Why? Because their main objective is to take capital from many and give it to few. Don't forget about that, and never forget about that, okay? Hence, they show trap and reverse. Most of the time, they show trap and reverse. And when they trend, sometimes you find that, okay, they have trapped a lot of capital, and they have to dig deeper. That's when you find that they are trending for many days. Another reason they trend for many days is markets are regulated. Okay, they are regulated, and they have to comply to the overall economy of the country, or a specific country. Okay, what I'm trying to say is, if you look at, I feel like I'm gonna over explain today, but I'm sorry for this. If you look at the news that are released every day, when we have a combination of this news, okay, a combination, because every day we have news. If I click here, we have news today, we have news tomorrow, we have news on Monday, we have news every day. Okay, so a combination of this news on a specific currency build up the economy of that country. For instance, like today we have an unemployment rate, tomorrow it's unemployment rate non-farm, we know about that. Today it's this and this, and on Monday there'll be something else under the dollar. Okay, when a combination of this news is analyzed, okay, they give an overall picture of how the economy is expected to behave. For instance, the economy will go up or down based on all of these fundamentals that are released on a daily basis. So if all these fundamentals combined say, okay, the dollar has to strengthen, well then market movers have to comply with that overall objective. Okay, this is why sometimes you find, okay, for this past 2 years, GJ has been going up. I just want to give an example. Okay, GJ has been going up. Okay, that's because they have a long-term goal that they have to align with, okay, based on the economy of the country. Okay, so the overall fundamentals can't say that the dollar has to strengthen and the market movers do the opposite. No, they have to comply. However, as we said, on the short term, maybe daily or within a week itself, they are allowed to manipulate as they want. Okay, but they have something we call ADR. Okay, and that's why ADR is in place, because That's something I explained in my previous video, but just to give a glimpse on it, it's the amount of pip they are allowed to go in a day, okay, on a currency. Maybe it will be 200 to 300. That's on a day. And on a week, they're allowed to go 600 to rarely 1,000 pips a week. However, most of the time, if they exceed those ranges, they will make sure that before Friday closes, they come within that range, because it's by law, okay? They are regulated. They don't do as they please, okay? They can throw all the tactics, they can manipulate as they want within a week itself, okay? Within a week itself, within the day. That's why you hear long-term traders will tell you that they don't care about intraday, because it's mostly something like manipulation. Yes, it's manipulation because they are allowed to do that. However, going outside of a week, that's when they have to start complying with the overall economy of that country, okay? They have to follow the overall economy of that country. Hence, if the economy is growing, you'll see an uptrend. If it's falling, then you'll see a downtrend, okay? Because they have to comply. But in a week itself, that's where they will manipulate as they want. And one method they use to manipulate, it's threes, moving in threes. Why? It's a psychological number. It is said that people are stubborn. They wait for something to happen 3 times. That's when they start believing it, okay? Therefore, remember, market movers are too advanced, okay? They are too advanced, okay? And they are well financed. So they have psychologists. They know how people, or how retail guys think and behave. They know which button they can press that will inflict more pain on retail guys, okay? For instance, they can use time against you. For instance, you'll be sitting in front of your chart, and you want the chart to go now. You are opening a sell and you want that sell to go now. You want them to go 50 pips right now. Sometimes they can take 5 hours just moving within a range of 20 pips, 20 pips. You're gonna get tired, okay? Why are they doing that? Because psychologically, time is something we don't have. Nobody has enough time. There's a lot of things we have to focus on. There's a lot of things that is happening in our lives. There's a lot of things we have to do. Therefore, time is something crucial, and it's as scarce. I don't know how to put this, but it's something scarce, okay? We don't have enough time. Hence, most people are failing in time management, okay? We are failing to manage our time most of the time because we don't have enough of it, okay? So they will use time against you. They will use the three pushes, and 3 pushes. Why? Because people are stubborn. Something happens the first time, you say it's a coincidence. Second time, it's a coincidence. Third time, now, yeah, you start believing that, okay, this is happening because of this, okay? So hence why most of the time they will take it up first session, take it up second session, take it up third session, then correct. Why? Because people now believe that, oh yeah, this is an uptrend indeed. Because people are stubborn. Another reason is for those who are using indicators. Indicators are lagging, and they're just built that way, okay? The market is built in a way that indicators cannot detect what's happening quick, and that's what gives them an edge, and most people are relying on indicators, okay? So it will take time for indicators to detect the underlying trend. So by most of the time, they will start detecting it on the 3rd day. Hence, we have a 3-day cycle. They will start detecting on the 3rd push. That's why most of the time after the 3rd push, they correct, okay? So let's look, because this is what I have to clarify. I did talk about, like, okay, most of the time they'll go up first session, they'll go up second session, and they'll go up the 3rd session. However, yesterday they didn't correct. This is why I think it's important to clarify, okay? Remember, we talked about variations of threes. Everything is in threes. Somebody will say, no, this thing doesn't work. It does work. The problem is there are variations. If they use the same method every day, then people are gonna cram them. What happens when people crams them? Then that defies the objective of the market, which is to move capital from many and give it to few, okay? And remember, that's the objective that will be protected no matter what. Okay, so okay, we say they can go up in terms of session, we say they can go up in terms of trend, they can trend, pull back, trend, pull back, trend, pull back. We say they can go up in terms of pips, and for pips, that's where we use boxes. Okay, this move started here, but it went the full range on this box, so they went 50 pips up. Yes, we can all see, and we agree this is the first push. They went 50 pips again, this is the second push. They went 50 pips again, and they fade after completing this 50 pips. Right, now we have three pushes of 50. This is why we use the box. Why did I start it here? Because as you can see, the move started here, it didn't complete anything underneath here, so I take the boxes in which the move was completed. Okay, I take the box in which the move was completed. Now I have three levels, so they went three levels like this. But what I really want to clarify is why they went 3 sessions and never corrected. It's because of the variations. When you look in terms of pips, they did correct after this. Now I expected, honestly, I expected the Asian session to correct for GJ and Euro JPY after yesterday closed. Why? Because they just went up and up and up. Do you know what this thing does? They show trap and reverse. Do you know what this does? This gets many people to jump on the onto the trend, because indicators are now showing it's going up, it's going up, it's going up. Everybody can see, oh, it went up, 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 up. Even those who are stubborn can now enter. Okay, so as they didn't correct yesterday as it closed, I anticipated them to correct during the Asian session. However, I was a bit tired, and I did set an alarm, but I just, you know, when you're tired, I just switched it off. Okay, so when I came back, I came during the Asian session, during the London session. Okay, and let's go to 5 minutes. Okay, remember, let me show you something very important. You see, this line is on one side, so if you sold here, you didn't have a sign to sell, because the move the whole day, the move was just up. If you can see, this move was just above the EMA. Looking at the 15-minute candles, which we do our analysis on, they never closed 2 candles below the EMA. This is the 28 EMA, by the way. They never completed, they never closed 2 candles under it. Okay, show me 2 candles that closed under this line. We don't have that, hence you didn't have a sell. Don't sell when you don't have a sell. Don't try to catch the high. Wait for it to be confirmed, then enter. Okay, don't gamble. It's a business. Wait for confirmation. Wait for confirmation. They didn't close 2 candles under the EMA. I know many people will say this doesn't work. It's fine, but show me 2 candles that closed below the EMA. They closed one, second one closed inside. This one hardly closed. Okay, so these were the only 2 points where they went below the EMA of 20. Okay, so you didn't get a sign, and you can't tell me that you got a sign this time late. Okay, well, if you entered maybe here, you are still in profit even now, but I don't really expect that, because it's late and we know what they're gonna do when it's late. They're just gonna open their spreads most of the time. But if you did get this one, well, congratulations. Okay, so coming to 5 minutes, I came here today at London beginning, and as you can see, I drew my low and I drew my high. I always draw this line. It's just to see which side of the trend are we. Okay, it's a trend line, but we don't use it to make decisions. It helps us to filter out nonsense, because as long as they are going up and moving up on the other side, on this side of it's an uptrend, there is no sign to sell. Okay, unless you are trying to catch the low, then you are guessing. You might think, oh, this is the high. Oh, okay, I'm entering. They come and closing. This is the high. Oh, entering, they closing. This, and you can't keep on guessing the highs. Okay, so let's see. When I came here, I drew my line. I saw, okay, yes, they gave me a triangle. However, they are inside the low and the high. Okay, and one thing I know for certain that we have is a market that is broken down. Now it's broken down. Am I saying it's gonna keep going down? No, I'm saying when I came, I saw that this was a broken down market. Well, then someone will say, okay, uh, do this live, okay, show how you take it. The problem is, if I'm showing what I take it, it's like sometimes you will be expecting it, okay, for instance, if it's a day 3, you will be expecting it to behave in a certain way, and when it doesn't behave like that, then you end up not taking a trade. Then people start saying, oh no, you don't know what you're talking about, okay, because taking something live, like I don't know how to put it, but for those who are saying I should take it live, I believe sometimes I do post live on the community. It's easier to post a picture before taking, okay, but I want people to understand what's happening, okay, more than just giving a live trade and then you don't understand why I took it and stuff. And it's going to be hard for me to take a live because usually I'm mostly scanning different charts, and as you can see, it gives a pin and an engulf, and while I'm still recording, by the time I want to enter, it's here and I can't take it anymore, okay. So I will do live. Yes, I will do a couple of live, but it's just not easy most of the time when taking a live, in my experience, okay. So you see, when I came, I drew this, and then they broke out with a big candle to the top, and then they gave this. I'm on a 5-minute chart right now, okay. This is where I always base my entries, okay. Sometimes on a 1 minute, but rarely. I mostly use 5 minutes, and I told you the 2 candles I look for is a pin and an engulf. Now we are in a broken down market. They give us a pin and an engulf. Immediately after this engulf, that's when I entered, okay. I entered on this engulf for GJ and Euro JPY. I showed you the correlations, okay. So they are mostly gonna do the same thing, okay. Correlations do change over time. That's why you just have to keep on going to Forex Factory and checking the correlations, because they change over time. You might find, okay, today they are 90%, and then next year you find, oh, now they've changed, they are 50%, and they are no longer behaving as you expect them. Then you think, oh, this was a lie and stuff. No, correlations are not permanent, okay. They change based on market condition, okay. So when they gave this engulf, this pin and engulf, this is where I entered, okay. Actually, I entered before this candle closes, because what I do is I wait for a couple of seconds, because I know that, okay, they can do this, and then when there's 20 seconds left, they just pull back and it ends as a pin up, pin down, okay. So I wait usually for the last 10 seconds, the last 5 seconds, then I enter. So I did enter somewhere here, and this means I took it before the equity opening time, which was 9:30 for South African time and 15:30 for 3:30 actually for US time. So I took it here, and I think I took 25 pips if I'm not mistaken, because I took it up to this point, okay. Why? Because for me personally, this was the first push, this was the second push, and I knew, okay, I will be left with the third push. However, the most important thing that propelled me into closing is I knew that the equity time is coming, they're gonna open, and if the move usually starts before the equity time, then I'm expecting the equity time to maybe correct a bit, because we don't know what the equity time is doing. Why? Because we know that most people are chasing the move anyway. So when people are chasing the move, the London guys open, they see that, okay, many people are on this, then they are just gonna correct, okay. So that's why I closed it before. And besides, it's not about holding for me, it's about quality, take it, get out, and sort of stuff. And when it corrected, as you can see, even now I'm out. When it corrected, I was out. I don't want to know if it's gonna continue. Yes, it can continue going down. Maybe it can go down 100 pips, I don't know. Maybe it can correct, but usually this is a consolidation. They break out, pull back, trend, they break out, pull back, reverse, they break out, pull back, and consolidate. They can do anything they want, but for me, I'm out with my 20 pips. I'm good. Why? Because I did expect this to happen after this. Yesterday they didn't correct. Many people are jumped in based on the indicators and stuff, thinking it's just going up and up and up, because you know how we behave. I told you these guys have psychologists. They know that people want 1,000 pips in a day. You want it to go up and up, no? If you want to be consistent, let me tell you a little secret. If you really, really want to be consistent and you are an intraday guy, that means you are rarely going to get 80 pips, okay? You are rarely going to get that, okay? You are rarely going to get 100 pips in a day, okay? It's going to happen sometimes or most of the days, but if you really want to be consistent, just target maybe 50, 75 is 25, 25, 25 based on the volatility of the currency. Don't expect it to go in one direction forever. No, increase your size, lot size. Take what you take, because someone is going to be waiting to take 100 pips and they're going to use a small lot size, okay? And to them, for instance, some is going to use 0.1. Sorry about the noise, okay? Someone maybe is going to use 0.1, and as they use 0.1, it's going to mean if they have maybe a leverage of 2000 as Xness does give it, then it means that, okay, 100 pips, it's $100, okay? For 0.0, actually it's 0.1, okay? Yes, it's gonna be $100, and somebody is gonna use maybe a bigger lot size, maybe 5, and take only 20 pips, and they're gonna make 20 times what you have, 50 times what you made in 100 pips, whereas they just got 20 pips. And remember, it's much more easier and quicker to get less pips in the market, okay? Yes, the risk is high, but believe me, this person who's taking less pips is gonna be more consistent, okay, and more satisfied, and is gonna have a lot of time to actually do what they want to do. They're not gonna stay or look at the charts the whole day. No, you see, it only took me 25 minutes to take 25 pips, okay, and it's gonna take somebody the whole day to take 100 pips, okay? But now it comes to quality and size. I just want to add this part, quality and size. When you use high lot sizes, you can get what you want quick and get out of the market. 20 minutes, 1 minute, 40 minutes, because you'll hear most profitable intraday, I repeat, intraday guys will tell you that, okay, we are only there for 30 minutes, okay, we are only in front of the charts 20 minutes, we are in front of the chart less than an hour. And you, because you're using a very small lot size, you want to get the most out of the small lot size, and that is kind of crazy because it's more stressful, okay? You can't go out and have some peace if you are still on the market, okay? This guy was here, I was here for 20 minutes and 25 minutes and I'm out. Then you can go out and have some peace and then come back during the US session and check maybe 30 minutes, get out, and you are fine, okay? So I just want to talk about this a little bit, because most people, not that they are not consistent, they are consistent. The problem is they need more than the market is willing to give. And remember, these market movers know that greed is part of their tool. They know that they use greed against people. People want a lot, they're not going to give a lot, okay? They're not going to give a lot. They'll give you 50, then reverse. Look at gold. Gold can go 100, but most of the times it might just go 50, correct, or change directions, okay? So if you are there for 50, then it's fine. Just know the kind of setup you are looking for more from, and the kind of setup you're just looking for quick in, quick out, okay? So let's go to my last one. I know the video is already too long, but I took this one as well, okay? I took this one and GJ because I told you they're highly correlated. Yes, the same thing applied. They went up 3 sessions. They didn't correct. They just went up. Everybody is in expecting that it's gonna go 1,000 pips up, and since you know that they will never go 1,000 pips up, they can go 150 pips up. There is the ADR, okay? ADR, okay? So if they go 150 pips up, 250 pips up, 350 pips up, they're gonna correct. So instead of chasing something you don't know where it's gonna end, it's better to get into something that you can really measure, okay? Let me show you what I did, okay? And the reason I'm clarifying this is because I know many people are saying, hey, this thing doesn't work, this thing of sessions, yeah, it doesn't work. No, it does work. It's just that you have to know the variations. Okay, they went through the session. I'm expecting the following session to correct. Okay, is it gonna happen always? No. Is it gonna happen most of the time? Yes. So I wasn't there on Asia, as I said. I came during London, and as I came to the screen, I just drew my highs and lows. Okay, the highs and lows. And as you can see, I draw this Fibonacci extension, and as you can see, it's on currently on 2, but I took before it reached 2. Okay, because I took before the equity time opens. I know the equity time will bring something, because sometimes the equity time will just change directions and go the opposite direction. We know that can happen. Okay, so for me, as you can see, it only took me I took 45 pips on this one, and I think it only took me less than let me check, because it was quite quick. Okay, less than 30 minutes, I think, because I entered on 5 minutes. I told you my entry candles, guys. I told you my entry candles. These are my entry candles. Sometimes they won't give the pin, but they will always give the engulf. Sometimes it's gonna be a doji where they spend their 15 minutes like tempting people to go up and then just correct and yeah, give an engulf, shift the zones immediately, because they want those who went up to be in a loss immediately, and then it becomes harder to close a loss. Okay, so what I did was, okay, I saw that I'm inside. Okay, I saw that I'm inside, and they just closed the previous 4-hour candle here. Because one skill you have to develop is you must be able to trade all time frames on a 1 minute chart, on the chart that you are using. I'm able to trade the 4-hour charts, the 1-hour charts, and all the charts maybe on a 1 minute. Yes, I'm able to do that. I'm also able to take a 4-hour chart, 1-hour chart, daily chart, and all sort of stuff. I'm able to see what's happening. That's why we have this high and lows, because that gives us our daily charts. And we also have, this is from here, it gives me the last 4-hour candle, and I knew that, okay, now they closed everybody who was in profit from the last 4 hours. Okay, and obviously, as I said on GJ, we have a market that is broken down. It has broken down. As you can see, even here I drew my line. I always draw my lines, okay, just to see which side they are trading, because I don't want to be counter trading something that is not even giving a sign. As you can see, they just come in touch, came in touch, but they hardly really closed a couple of candles under it to show that, okay, now we are going down, and they hardly broke structure. Okay, so this was just going up. For those who sold, I don't know how you sold. Okay, so yeah, this is what we are talking about. And I saw this candles. I talked about this candles pinning golf. After closing it, this was a nice stop hunt, and I entered here for 45 pips. Okay, did I know that I'm gonna take 45? No, I didn't know. Did I expect that? No, I didn't expect that. But knowing that the equity time is gonna open in a couple of minutes, then I wanna avoid being exposed to it. Okay, I don't want to get exposed to the equity time open, which is 9:30. So I took roughly how many was that? I think I took 45. Yeah, so it was roughly somewhere here. Yes, on this candle. Okay, on this candle which was going down, that's where I closed everything. Okay, because I also based everything on yesterday. Okay, sometimes that's what I do most of the time. I based it on yesterday. I wanted to make sure, okay, they take out these guys, and these are the guys that entered yesterday during the Asian session. As you can see, they gave them a pin, and they gave them a nice entry. So if they give you something nice like this, obviously they will come for you. Okay, they'll come for you. In this case, they even went for these guys here. Yes, they closed them, the guys who entered right before the London session. Okay, so this went 2 expansions. Yes, it can even go 3. It's still possible it can keep going down and down and down, but as I said, it's better to be in and out quick. You see, in and out quick. And on a 15-minute time frame, it was gonna be a little bit hard to enter, because I was gonna use one candle as confirmation, but I just chose to enter as I always do on a 5 minute. Okay, so this one gave me a good entry, and even my stops were not that bad, because I think I had no, I didn't take it all the way to the top. I took it to somewhere here. It was less than 20. Okay, they were less than 20. Okay, I think they were 16, roughly 16, 17. So yes, I took them here, and this went down quite quick. This is what you need something quick. Okay, so all in all, what I'm gonna say is, I know I'm over explaining, but I think this will help. Most consistent guys, what I've learned from them, okay, is they're not there to take 100, 200, 300. No, they are not there for the amount of pips unless they are swing guys. Okay, but most intraday guys have mastered the advantages of using high lots. Okay, because it doesn't matter. It doesn't matter. Somebody is gonna look for 500 pips. Is somebody who's using a very small lot size. Those who are using big lot sizes, you know, the other reason that forces you to close quick is the amount of stress that gives you. Okay, you know, you have exposed a lot. Yes, when it goes down, you are actually gonna trail your stops. Maybe after this candle has started going down, you trail your stops. I always do that. If my stop is here, I'm just gonna make sure I move it maybe to here. Okay, but not immediately. You can't move it on this candle, because this candle doesn't just go down like this. It goes down, pulls back, goes down, pulls back, and you can see that clearly on a 1 minute chart. On a 1 minute chart, that's where you can see it quite clearly, because as you can see, it went down, it pulled back, and there is spread also. When they get to this point, you might think that, oh, this is where they ended. No, they actually use spread, and they do open spread. Okay, I will show you a picture one day. I have a picture of the back end where they just manipulate. They can open spread, they can reject your orders, they can do whatever they want. I'll show you the picture in the next video. Okay, so you want to make sure, if you are trailing stops, let them pull back on a smaller time frame and then go down. You see, as the candle is here, then you can bring your stops above here, because if they go back and hit them, that means they are reversing. Don't trail them immediately. Okay, you can't trail them immediately after this candle, because it's not just going down, it's going down and correcting. Okay, so again, I will emphasize, if you can, use high lot sizes. Okay, use high lot sizes. If your account is small, you can use small, but take quick. Okay, don't say, okay, I think I've experienced with this, because most of the time I always said, oh, no, I need this much, I need a bigger what, I need a bigger what, I need a bigger what. No, yes, I've experienced that. I did that. Okay, so hence why right now I really I'm saying, don't wait to take everything out of the market. Okay, don't wait to take everything out of the market. That's greed, and most of the time they'll come back for you. Take what you can, take what's given, and then move away. The best thing is to take on the first push. That is the most quickest trade you can ever get, and it gives you peace. If you use the high lot size, you don't care about this. Now it's moving, you won't be chasing it. But if you're using a small size, you want to get the maximum amount of pips it goes. When you come back after closing, after maybe 40 pips, 45, 50 pips, then you feel like, oh, no, I missed a lot. I shouldn't have closed it, to start regretting and doing all sort of stuff. That's because of the lot size. Okay, just grow from that. If you are using a smaller lot size, take. You don't want to be in something that comes back and closes you. No, take when you can. The best way is to take the quickest move down. That's how consistent guys do it. They are in, they are out. 30 minutes, they are out. Besides, the main objective or the main goal for most of traders is free time, the freedom it gives you. Okay, you don't want to be employed or married to your charts. No, you want to have free time. You want to have some time to do different things. Okay, so get out, use high lot sizes, get out, but you must first make sure you're profitable, then you can use high lot sizes. Okay, and here's something, one last thing, which I think is still important. Okay, sometimes I know we have been made, and I've also said this before, it's not how much you can make, it's how much you can lose. That is important, and that should actually be part of your decision on how you open a trade. That's true. But remember, if you open a position and actually lose it, okay, you can open after this engulf and they can come and close you. And you'll feel like so bad. You don't have to feel bad, because if your win rate is about roughly 60%, okay? I think this is important, guys. That's why I think I should talk about it. I know I talked about a lot of things in this video, okay? And I'm sorry for that. Okay, if this is your win rate, say your win rate is 60%, okay? Then obviously you're gonna lose 4. You're gonna lose 4, okay? So, for instance, if you are risking maybe $100, okay, you must first make practice and spend a lot of time on your charts before you achieve something like this. Okay, I'm not talking about when you're starting go and open big lot sizes. No. Spend thousands of hours on your chart. You can start with a small lot size, but learn to take, even if you're using a small lot size, you can take, say for instance, if you're using a lot size of 0.001, okay, 0.01, okay, then 0.01, okay, then what you can do is you can actually start with a smaller one. You can actually take $5 per trade. If you have a high like if you're using Exness, you can actually get leverage of 2000. That means you will be able to open a position. Even with any leverage, you can open a position. Like if you are using Owanda, you can deposit $10, but with Owanda it's much more better because you can deposit any amount. You can even deposit 20 rand, guys. Yes, you can with Owanda. However, because they are using low leverage, that means you won't be able to open with 20 rand, but you will only be able to open if you have $10. You can open 0.1, but take 50, take $5, okay? Don't wait to take $10. Okay, now your mind is like, if I make $10, guys, remember, you ain't gonna get $10 for every trade, but what you can easily get, it's $5. You can get 5 per trade. 5. Take 5 trades, you have $25. Then you can increase to 0.02. Yes, you can do that, and take roughly 50 pips, you'll have $10 like that. Like what I'm trying to emphasize is learn to take small amounts of pips and then slowly increase lot size. That works better than waiting for 100 pips that you're not gonna get. Okay, most of the time you ain't gonna get that. Most of the time, guaranteed, you ain't gonna get that. But most of the days you are gonna get 50 pips, you are gonna get 20 pips, you are gonna get that most of the time. So it's better to go for something that's realistic, something that you can get on a daily basis, than to go for something you ain't gonna get daily. Sometimes you'll go 60 pips, 70 pips, then reverse, okay, and then you'll feel bad if they close you and so all sort of stuff. But if you have 50, 45 as your target, then it's gonna hit it quite quick. Sometimes I look at how they behave. Sometimes they'll go 49. They know that people want 50. They might go 49 and then reverse, okay, and use spreads to go above 50 to close those who are below or above, okay. So if you are risking $100 and you have a win rate of 60%, then out of 10 trades you are actually gonna lose $400. That's something that you should think about. You will lose 400. However, you will make $600. Okay, 600. Okay, with a win rate of 60, and you are risking maybe 100. Okay, no, you're not gonna make, for if you are risking 100 to make 1,000, okay, to make $1,000, that means you are gonna make you're gonna make 6,000, okay, $6,000. I'm just giving an example. And you are gonna lose 400. You're gonna make 6,000 and you're gonna lose 400. I just want to give you something that is very important. You're gonna lose, if you're risking per trade, you're risking 100, you have a win rate of 60%, then you're gonna make 6,000 if your target is $1,000 per trade, okay, and you're gonna lose this. So if you subtract this from this, then you can see that you have 5.6 in profit. So if you lose, say maybe you lose this, you can't complain and say, no, I lost a lot. No, it's part of production cost. Why? Because if you don't open based on your, I gave you a trading plan, based on your strategy, documented on your trading plan. Remember, we execute one thing every day, and if it has a high win rate, then that's where everything is made, and that's what matters the most, because every day we're going to execute the same thing. For me, I do the same thing every day. I do the same thing, okay? So yes, sometimes it's going to hit you. No strategy is 100%. It's going to hit you, and when it hits you, you can't complain, because that's part of your win rate, okay? So some people complain and say, hey, I'm losing. No, you're not. Hey, I regret opening this one. I shouldn't have opened. No, it's not about you shouldn't have opened. You did open it, right? So you don't have to regret ever opening it. No, because that's part of production cost. Production losses are gonna be there, but the win rate, the goal is to strive and improve your plan so that you get a win rate of above 60 or 60. That's fine. 60 is enough, okay? 60 is enough. Even most big firms, they have a win rate of around 60, okay? It's enough for you, 60. Then if you execute the same thing every day, when it happens, when you don't have anything, when it doesn't appear, you don't open anything. When it does, execute it, and you maintain a win rate of 60%, then you are gonna make more. Because remember, if you don't open, then it means, why are you happy when you make this if you regret when you lose this? Because part of losing this is why you made this, okay? Even those you open to make this could have ended in a loss, but to make sure that you make this, you have to take the risk, and the risk comes with losses. But as long as your win rate is good, then over time you are gonna make or have good results. And one thing which is a misconception is, if your strategy is good, you're always gonna win. No, it's not gonna happen. The only two things you can control is your take profit and your stop loss and your entry, which makes it 3 things you can control, okay? Those are the 3 things you can control. Then the market will do the rest, as long as your strategy is good, okay? These are the only things you can control. Hence, I just want to take quick, because these are the only things you can control: your take profit, your stop loss, okay? So if you don't lose this, you won't make this, okay? Because this comes from this, okay? If you don't want to get the negative results, then you won't make this, because what gave you this is the risk that you took, okay, based on your win rate. And that's what makes it perfect. Always remember this. You can write it down. It's not one trade that makes a person grow fast. It's a series of trades, and they take time, okay? They take time, okay? They take time. It takes time to build consistency. Consistency, it's over time. Yes, if you really put in the hours, you will get consistent, but remember, it takes time to be consistent, and there will be losses. It's like when you're starting, you're gonna lose a lot. Why? because you are still testing the waters, and you need to know what works, and to know what works you must pay the price. Okay, you can't just take everything somebody says. No, you must back test it. You must put it into practice. Even after back testing and knowing that yes, you're winning 90%. Remember, when you're using a demo, there is no spreads. There is less competition, okay? When you come to the real ones, that's when you realize, oh, no, it's not what I thought. Here, it's a bit harder because there's a lot of competition. Let me show you something I'm talking about. Is it euro? Is it here? Okay, there are people who entered last night here, guaranteed, and put maybe their stop losses here. Okay, just want to show you something. I can guarantee you that all these guys have been taken out. Even those who put their stop losses maybe here, I can guarantee they have been taken out. Why? Because when they come here, they are gonna open spreads at the beginning of each day. They can open 50 pip spread quite quick. They just want to make sure, if they are planning to go down, they want to make sure they clear everything before they go down. That is guaranteed. Hence, I hate opening position after 6 o'clock, because I know that I'm just opening them from floor spreads. Even those maybe who put their stops here, when they come somewhere here try this, you'll see. Try it, you'll see. Open positions later on 8, 9, 10. You'll see what I'm talking about. They will open up spread 50, 60 quite quick within seconds, and everything will just be closed. Okay, that's the game they play. Okay, so that's why I'm saying on a demo you might win all the trades, maybe have a 90% win rate, but when it comes to reality, that's where reality is gonna kick in. So remember, part of losses are part of production costs, because you don't know that whatever trade you're opening is gonna work out for you. You know that you have a win rate of 60%, but out of the reason it's 60%, even though you're taking the very same thing, it's because you don't control anything after you execute. The only thing you control is the stop and the take profit. So guys, always know that anything is possible. Hence, you will have losses, and they are part of your profits. Losses are part of your profits. Why? Because if you didn't open the ones you lost, then you wouldn't have opened the ones you made. Okay, because we are executing one thing every day, but sometimes these guys have an advantage. They will just see where more stops are, and they will just hit you. It doesn't matter. Even the best in the world are losing at some point, and they don't have a strategy that goes mostly beyond 80%. It's quite rare to find that, if it exists. Okay, just that people won't be honest with you, but most of the time it's gonna be above CGST go to maybe 70, and that's it most of the time. If you find somebody who has 100% win rate, then I don't know. Okay, because yeah, losses are part of the production cost. Okay, so always know that, and don't feel bad if you lose, because sometimes we don't open lot sizes because we are scared. Remember, you're gonna think, okay, I lose, now I'm exposing $100. If I lose, no, if you have a win rate of 60%, you're gonna make more. Okay, it's just that your losses, yes, will be a bit high, but even your profits are gonna be a bit high. So yeah, basically that's how it works. And don't regret ever having losses. They're part of the game. Nothing is 100%. The only things you can control is your entry and your exit and your stop loss. Those are the only thing. If your strategy was bulletproof 100%, then you wouldn't need stops. The reason we use stops is because if we are wrong, we want to minimize the losses and optimize the profits. Okay, and that's what counts in the long run anyway. But you don't need tight stops of 5 pips, because you need to give the market some space to play in. Preferably, I prefer 10 to 20, anything between 10 to 20. I think, yes, that gives markets a lot of space to play with, because most of the time, even if you have taken afternoon golf, they can just, as you can see, there was a green candle, and the green candle simply means they went up. So they did play within in between your entry and your stop loss, but they didn't get there, and then they just went up. So don't feel bad when you have losses. Don't feel If you feel bad when you have losses, don't feel good when you have profits, because if you're executing the same thing, then there is no profit without losses. That's part of the game. And as I said, high lot sizes gives you peace. You don't go chasing 1,000 bips. No, you get 20, you are fine for the day. You are good. You get 45, you are good for the day. Okay, so yeah, that's what I would say. And the good thing that I prefer, or something I love those trades that go quick. Wow, and they are done. They give me like less stress. Okay, so yeah, those are some of the things that I think are important. And sort of for making this video long, and sort of for over explaining, and I wish you all the best. Okay, 3:30 is coming. There is news at 2:30 South African time, and the market is opening at 3:30. So preferably for me, I say wait for the news to trade, and actually after the news of traded, roughly around, that will give you 1 hour. Okay, if you're waiting for 3:30, then you have 1 hour from the time the news are trading. Okay, and then by then they will have settled, and that's when you'll have a clear picture of what's happening. That's when you can get some quick trades. Boom. If you don't get it around 3:30, okay, then wait for what happens from 4 o'clock. That's another hour. You can get it around there. Okay, so yeah, I wish you all the best, guys. Just don't be in a hurry to open things. Be a little bit patient. Wait for the right signals to happen. As you can see, I waited. It's okay, it came and closed this, guys. People chased it. I waited for it, and I took profit. I also knew why I was closing. Equity time was coming, and I knew that equity time can do, what if they reverse, what if they do this. So I don't want to feel like, okay, I was in the market but I didn't get paid. No, get paid. It doesn't matter how much it is. Get paid. Okay, don't chase the amount of bibs. Chase quality and lot. Okay, and just know where to open your lot. And when going back to yesterday, just know your signals, because yes, if somebody entered somewhere around here blindly because the session went up and up and up, I am sorry, but one thing you should note is this move was up the whole entire day, and then it did go down. But if you look at other currency, I think it was USD CAD. Was it USD CAD? I saw some currencies that actually played out well yesterday, and it was of course good. But not all of them are gonna play well. Some obviously won't play well, and wait for the next day. So always look at the bigger picture. Okay, it's not about what's happening today. It's about what's happening over time, and that's what makes everything fascinating. Okay. That's what makes everything fascinating. Okay. And yeah, all in all, I thank you guys.